It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Wednesday evening, January 27th, 2016. Cruising our way through this final full week of this first month of the year 2016. FOMC day today, inventory day today. It was definitely setting up to be a challenging one. Get some whippy price action around that news. I hope you followed the plan today. If you followed the plan and you stayed patient for proof, you got some profit out of a very challenging day today. If you didn't follow the plan, you bought high, you sold low, they made you paid for it today, didn't they? Absolutely. This is exactly why we do this prep work every evening, so we have a plan for the next day. Okay, bottom line, get a busy newsletter in store for you guys tonight. Tomorrow is the exciting day of FOMC. Tomorrow is the day after FOMC. All the analysts, right, they're going to be at their desks all night tonight. By tomorrow morning, all the traders are hitting their desks. There should be analysis work and instructions on their desks, and most traders tomorrow is the most important day of the FOMC two-day meeting, all right? Expect some more volatility tomorrow on our best behavior tomorrow. We've got a good plan for you guys, though. Crude oil starting off tonight is bullish, but the bulls just finished their measured move on the oil, and sellers held their pullback. So we expect to see a bearish two-legged correction back to support levels before the next leg higher on the black gold. How about the S&P? The S&P is range-bound this evening. 3 pushes down to the range lows. Tells us to look for the buyers to push price right back to range highs tomorrow. And all we need is a little bit of proof. All we need for those bulls is to see those sellers fail on the next pullback. We're going to get information on the S&P in just a few hours, I assume. On the gold, the yellow metal is bullish this evening, but trading at the highs of a channel, just inches away from completing a multiple measured move, which tells us there isn't much room left up here at these highs on the yellow metal. Buyers will want to wait for a correction back to channel lows before they buy more. And the euro, the 6E, also bullish, but it appears the buyers already get their target because the last few attempts to push higher on the euro have been very, very weak, which tells us to wait for a two-legged correction lower before we consider buying more. We'll get a lot to cover in tonight's newsletter for crude oil, S&P 500, gold, and the euro. Before we get started, though, I want to make sure you guys are watching this video right now on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link in the description of the video. Take you over here to our trading blog. First of all, you are invited to come out and grab a free pass to attend our live trade room. If you're not a member of School of Trade, grab your free pass in the upper left-hand corner. In the lower left-hand corner, you can register for our nightly newsletter mailing list. All I need is your name, your email address, and then make sure you check your inbox. I'm going to verify we have the right address. Right below the video tonight, you can download all the charts you see me using in tonight's video. That way you have that ready for tomorrow. And of course, over on the right-hand side, you can register as a trial member. You can learn more about our 3 levels of membership here at SOT. And of course, you can always contact the office and ask any questions you guys have. Brokers, data, charts, whatever the question may be, use that live support button on the right-hand side. You got your helmet on, seatbelts fastened. I hope you hydrated. We get a busy one here. Now, tomorrow morning, Thursday, January the 28th, typical Thursday morning, we've got jobless claims at 8:30. We're going to get some pending home sales at 10 a.m. That's about all we're going to worry about tomorrow. Again, we are pretty much programmed to accept 8:30 news on Thursday mornings. Tomorrow, nothing really different there. We got durable goods at 8:30 as well, but for most of us, though, news is news at 8:30. We don't trade the news. I don't even care about what the news is telling me. It's mostly all manipulated, and by the time I hear about it, it's too late anyways. So my personal opinion is, know when the news is, set your alarm, 5 minutes before, 5 minutes after, right? Just batten down the hatches, let the news come and go, and then continue trading your plan. The news is noise. Tomorrow morning, we have 10 o'clock news, pending home sales. That'll definitely keep it going here tomorrow. Again, set that reminder, 5 minutes before and 5 minutes after. I think the big news of tomorrow happened today. The FOMC announcement today at 2 p.m. Eastern Time. They really didn't say anything interesting today. It pretty much said, we're not changing rates. Everything pretty much remained on target, right? A gradual raising of interest rates. One thing they did comment on that was a little bit different, if you compare the last two notes, the last two FOMC meetings, is that they seem to be a little bit more optimistic on inflation, and that seems to be the number one target right now of getting inflation. Well, the FOMC, the Fed, that appears to be their biggest worry right now is inflation. Now, this is not an economist newsletter, obviously, so I'll let all you economists out there, right, bicker about the FOMC announcement. But reality is, we know today a lot of traders sat on hands and they let the news come out. Now they're going to have a full 12 to 18 hours to digest, right? Get a good night's sleep. Tomorrow is the day that we see a big reaction, right, to this news. Now the traders come back, right? They've got a list of things they want to accomplish. They've got a plan for tomorrow. So we will expect tomorrow to be the reaction to the FOMC announcement. Very similar to the Monday reaction after non-farm payrolls being another one of those big major news events that have a multi-day long, right, kind of lasting result. So bottom line is tomorrow, really got to be prepared tomorrow to follow the plan. It has potential to be very whippy as traders are gambling with what they think that news is. We are going to follow the plan and get for proof. Basically the P's, right? Stay patient, look for proof, and you'll earn profit tomorrow if you follow the plan. And again, if you don't have a plan, don't forget, I provide my trading plan to all of our students here at School of Trade, and we trade it together every morning at 8 a.m. Eastern Time. All right, let's jump right in here. Crude oil is bullish, but the bulls just finished their measured move, and the sellers held their pullback. So we expect to see a bearish two-legged correction back to support levels below before the next leg higher. Now we have a bull channel, 3 pushes higher, and a completed measured move for the bulls, which tells us that most of the smart buyers are going to take their profit at the channel highs, at the measured move highs, at the 3 push high, right? We also see the bears held the pullback after the drop off the high, right? I'm looking right here, right? That's where the bears, that's where they take control, right? They held that pullback after the drop of the highs. And even though the buyers took it higher again, they did not hold their own pullback. So as of right now, what I say in my trade room is, who has the benefit of the doubt? If you're a student of mine, you should be yelling, the sellers have the benefit of the doubt. Who's got to prove it? The bulls have to prove it right now. Now, obviously, the bulls can easily prove it, right? I can't predict the future. All I know is right now who has control, right? If the bulls want to prove it, they need to get a higher high and hold a pullback. That'll give a lot more buyers kind of the confidence they need to be shooting for that target up at 32.84 or 34.14. So, bulls have not been able to follow it up, right? Holding their own pullback. Bears have control, and the buyers need to prove it with a higher high and a hold the next pullback if they want to buy tomorrow. If the buyers take control, they'll be hunting for a new higher high and a possible test of 34.14. You have to assume that that high is going to be the immediate target. We also have to assume there are going to be some stops sitting up here, right? I'm sure a lot of professionals got short after seeing those buyers try once, try twice, right? And so stops are going to be triggered. They ran them out there. I would imagine now all of the professional sellers are going to be taken out of this trade above 32.84, probably 32.86, 87, 88, right? That should send that price higher. And then, of course, we want to see them hold that pullback. We have a big multi-day, just juicy, tasty target up at 34.14 for all the bulls. But again, I can't even begin to think about a measured 30. We have a measured move, multi-day measured move target at 34.14, and then we have an unfilled daily gap at 34, like literally right on the kissa, right at 34.14. So it's a lot of real magnets up there. But again, as of right now, though, I would expect because those bears, because they held that pullback, they've got the benefit of the doubt. The bulls have to prove it. And so we can at least say with confidence here right now, the bears are gunning back to that 31. Now, once we get to that two-legged measured correction, then we look for the sellers to try again. They may be successful. If they're successful, if the sellers, let me back up here real quick. My tongue is all twisted up. We see a two-legged, right, bearish correction. At this point now, we've got a couple scenarios. If the sellers do not hold their next pullback, buyers are going to love that as a way to shoot back to these highs, right? These swing highs overhead. And again, you got 34.14 probably later on during the week at that point if we correct back so higher, right? But if they do hold that pullback, right, then they're going to be gunning for that major support at 30.38, right, basically to negate the entire move, right, from today's session. So scenario one, new higher high, hold the pullback. We're gunning for the high, and we're gunning for 34.14, right? If we can't, we expect to see that measured move completed. If we can get the measured move completed, the sellers now know to take their profit. Buyers will look for seller failure, right, to buy it back up. If they're successful on that pullback, we're shooting for major support at 30.38. The only real difficulty right now is if you're going to be a seller going lower, just make sure you're aware of that channel lower. You've got some support here at 31.44. Just don't sell into support. But again, as of right now, though, bears, you guys have the benefit of the doubt. Buyers, you better put your back into it here and get this thing pushing higher here if you're going to take it. Moving forward here, the S&P. The chart of the day today. You don't hear me say that very often, kids, right? This is, by the way, guys, if you're brand new to this, the E-mini S&P has been a gift this year. Okay, I mean, literally, this is like 75 and sunny in Chicago in the winter, right? This is like a gift. The S&P has been some of the best S&P price action that I've ever seen, right? I mean, this is just not customary for the S&P 500. So I don't mean to spoil. I don't want to scare anybody here, but what we've seen over the last few months, right? November, December, into January, has been some exceptional range, exceptional volatility, and just incredible volume. And a lot of it has to do with the fact that asset managers who use the S&P 500 for hedging, you don't buy this market and hold, right? Major players in the market, they're hedging against other equity positions, they're hedging for business clients, right? And they're using the S&P 500. It's the most liquid market, maybe not in the world, right? I would imagine the 10-year notes are a little bit more liquid than the S&P. But the bottom line is, we better make some money while we got some money to make on this market, because this market has been all over the place, and that is a good all over the place. I know that a lot of people see whippy volatility and they think, oh my goodness, but if you're a technical trader and you know how to read fake outs, if you know how to read failures, if you know, as I tell my clients every day, if you know who has control, that's the key. If you know who has control, then you can remove the opposite side of the market and wait for them to fail. Right? I always say, think about it in a binary decision. Who has control, bulls or bears? Once I know that, then that cuts at least 90% of the concern out. Then I can focus on my proven setups, which of course we'll talk about tomorrow morning live in real time in our trade room. Okay, back to the plan. E-mini S&P is range bound this evening. 3 pushes down. 1, 2, 3 down to the lows. Tells us to look for the buyers to push price back to those range highs tomorrow. All we need is to see these sellers fail. Right? You can see that little pullback right now. Look for those sellers to take it, try to take it lower, and buyers will be looking for them to fail. Now, the day began in an incredibly narrow range. It was FOMC, obviously, so we talked about that last night, right? It was kind of expected, which was followed by both bullish and bearish tests of the range expansions. Now, look closely here, right? So we start the day inside of a trading range today. And this is just classic. This is why when somebody asks me, what would the best scenario be? If you could trade one type of day the rest of your life, what would it be? It'd be a total range day, just like this. Because you take that range, you copy and paste it up, you copy and paste it down, and what do you see? Right? It jumps up. And what type of patterns are we looking on range days? Who's been watching my newsletter more than a month? We haven't seen ranges very often in these crazy March 2016. Who knows the answer to that one? What's the best trade setup on a range-bound environment? If you're saying failures, you are absolutely correct, right? Buyers try to hold the pullback, they fail, right back into the range. Sellers take it down. They successfully reach their expansion. Sellers try to sell it, right? They fail, back into the range. Okay? Take the range, expand it up, expand it down. Those are the range expansions. And so we look to fade the breakouts, right? The market is in a balance. And think about this as a big pendulum, right? Take one of those pendulums, right? You know those little things you see, whatever they are, right? The pendulum swings back and forth. Keep those jokes to yourself back there, right? Call me Bob Ross. Anyways, we know that the pendulum swings one way, right? Pendulum swings one way, right? And then the pendulum swings all the way to the opposite side, right? Think about that pendulum swing, right? If you push that pendulum, if you push the price to the left, when you let go of it, what's going to happen? Do not say it goes back to the middle. It doesn't, right? It carries all the way through, right? The pendulum swings. Now, take that pendulum, flip it on its side. Now, there's your trading range. Buyers, what do? Right? The buyers take it up, fail to hold the pullback. You know where this is going. Now, what's going to happen? Pendulum. Okay, think about it. If you let go of that market now, is it going to go back to the middle? Well, it will eventually, but it should continue back through. How far? Just about the same amount, right? It went back up. What do you think creates a trading range? Take a guess. Give me one word. One word that is responsible for a trading range. It begins with a B. Balance. Balance, grasp, right? That's what creates a range. That's why the pendulum kind of theory works like that. Okay? So, now, ready? 1, 2, 3, back to the chart. Aha! I love this chart. Again, chart of the day. This is a very good chart. Great learning opportunity. Okay, now, count them up. 1, 2, 3. Okay, 3 pushes. Most professionals are going to see that as, okay, if we can't get more than that, we're done. Take your money out of it. Okay, look up. 1, 2. No, that's not a third right there. It's got to be a bigger one. It's got to be significant, right? The word is significant. This, in my opinion, is just one push. Now, if they went back up again afterwards, that would be a third push. Okay, now, number 3, right? 3 is the magic number. 1, 2, 3 down. 1, 2, 3. What's missing? What's missing here? What number's missing? The number 3 back at the high. Okay, now, I can't predict the future. There's no way for me to predict the future. All I know is I've been watching charts for 15 years, and this is what typically happens. Like I said, those 3 P's, right? Patience, proof, right? And then, of course, if you get that proof, you should be able to get some profit out of it. All right, guys? So, both bullish and bearish tests of the range expansions, 3 pushes for the sellers and only 2 pushes for the buyers. We can assume the next push will be back to those highs. Buyers should wait for proof in the form of a failed pullback. If price continues lower overnight, we assume they're trying to finish that gap fill at 1861.25, and then the buyers will be watching once again. Here's what I want you to be looking for, guys. If we go higher here, I'm looking for sellers to fail. That's the name of the game. As we go higher, just be careful. You're going to get some resistance up here at 93.08. You're going to get more resistance up here at 1906.19. Okay, 1906.25. Okay, ultimately, what those bulls would love to see is a major resistance test up there at 19.15.25. All right, keep an eye on that for the bulls. But again, if you're going to buy this thing tomorrow, take your profit at the reliable areas, okay? Don't try to hold all the way through this. Remember, right, a bird in the hand is worth like 100 birds in the bush, right, for day traders, okay? Get the money in your account. Grow your account, compound your profit, add more contracts, right, and keep making more money every day. That's the way to do it. Don't take more trades. Don't try to learn more setups. Don't go chasing after volatility. Just follow your plan, make your daily goal, grow your account, repeat. Rinse and repeat, rinse and repeat, rinse and repeat. My daily goal is a couple $100 when I begin. My daily goal is a couple $1,000 every day when I finish the year. Okay? Grow it out. Now, what if we go lower? If we go lower, this is where we assume if we go lower, this is where we're going to get a lot of traders getting trapped, right? So here's one scenario. We go lower, we tag major support. Now, if we push lower from here, the traders, the sellers are going to be trying to get to 18.55. Right? Remember, this is all balance area, right? Balance area. Balance area. These are all symmetrical. Okay? See, a lot of value in this free newsletter. So, now, we go down to that major support. Let's assume we take off the downside. Now, here's what you've got to see. Here's what almost gives you a bulletproof buy. They tag it. They try one more time. This is that 2-try rule that we talk about. If they can't get to that 55 within 2 tries, it should shoot higher. Again, we're going to have to wait for proof. Sellers can't hold the next pullback, right? Buy into their failure, right? We don't just buy. In a scenario where price is going lower like this, we use a failure. We don't just buy in a bearish market. We've got to get some juice. And when I wait for failures, the buyers are buying and the sellers are buying. That's what I need. I need to get that 1-2 punch to be able to get the juice that I need to get this price going in the opposite direction. Okay? So if we go lower, look for once, twice, look for literally a 2-try to finish that move down to that low. If they can't get it, that pendulum is going to swing nasty, right, all the way back up. It's going to be a really interesting scenario tomorrow, because if we do successfully get down to that 55, then we go into a new balance area, and then it's literally all hands on deck. We're going to wait for more information from there. Okay, if they get to 1855, we now have a successful kind of adjustment of the balance down to that range from 67, right, to 55. What the buyers are looking for is they're looking for the sellers to get down there but unable to finish it, right? And then that's when all those late adopter sellers, they're going to get run over if they're not paying attention. Remember, patience to wait. Proof, right, of who has control or who loses control, and that will result in profit. Let's keep going. Now we go into the interesting ones. Yeah, those were easy. Those are easy. Gold and euro are going to make your work tonight, right? These are the ones that are going to make your work tonight. It took me a while to put these together. This is why this newsletter is going out a little bit later tonight, right? A lot of chaos. FOMC news is big on the dollar. The dollar is the dog that wags the tail, right? The tail is the euro. The tail is the gold, right? These are dollar-denominated, again, commodities. Gold's a shelter market. The euro, of course, is the biggest chunk of the dollar index. So the gold and the euro, like I said last night, are always going to be the most kind of crazy affected markets because of the FOMC report. So gold is bullish, but trading at the highs of the channel, just inches away from completing a multiple measured move, which tells us there isn't much room left at these highs, and the buyers will want to wait for a correction back to those channel lows before they buy more. We have a major bull channel overshoot. We have a multi-day measured move, and we have a short-term bull flag. You don't see them that purdy very often. All of this are all telling the buyers to take their profit right here at these highs. Now you can see we haven't quite finished that measured move. We're just like literally an inch away. And this is one of those scenarios where, traders will look at this, and you have to look at this one of two ways. One, unfinished business, right? Maybe they slam it higher again, and then it comes back down. Double press high. Another way to look at it is the buyers saw the high of that channel, right? They saw the inability to close basically this red candle right here. Here's what spooks the hell out of me if I'm a buyer, right? If I'm a buyer right now, I'm seeing this overshoot, and I'm going, well, okay, let's see if it pushes through, right? I would hold it. If I had one more bullet left in the gun to try to get that measured move target, I'd hold it. But hold on. Once I see that green candle followed by 2 red candles, the second one is a trap. Look closely. Look at that third candle, that second red candle, the one with the arrow on it. Look at it. It goes one tick higher and immediately snaps right back down lower. But then look at the wick. The wick closes all the way back up, which tells me the buyers were still trying it, and then it dumped right back down. This just feels like the buyers said, I'll wait, and then, no. That's not what I'm waiting for. Get me out of this market. Okay, so that's what is going through my mind when I see that green candle close above the channel high. But then again, look at the following red candles. They can't even close above that green candle high. And what really, in my opinion, puts the nail in the coffin, at least for me, is to see that little one tick higher high almost as if to run out any sellers who try to sell it too aggressively, ran them out. Now you would assume we're going to pull back here for a deep correction before, right, we make that next leg higher. Now, again, like I said earlier, this is the FOMC reaction day tomorrow. There are going to be a lot of just hard-nosed traders coming in and saying, no, we're bullish, buy it. We're bullish, buy it. So this is why I say we're inches away. I see it as good enough, right? Wrap it up, take my money and run. I see that as mission accomplished. I'm done, right? But I'm sure a lot of folks may see this as unfinished business. And like I always say, this is why you don't trade counter trend. Because I can be the only person I can know exactly what's going on, but if I'm the only person that's thinking like that, it's still going to pull back a little bit and steamroll higher before they get the job done. Now all the rest of the buyers take their profit, right? And then it corrects back lower. The bottom line is, this is where I talk about manufacturing trades. We talk about this all the time in my trade room. Yeah, okay, I could get long here. Yeah, we have some measured moves left outstanding. Yeah, we have that bull flag measured move. We have the major measured move, multi-day measured move. But how much more profit is there before a correction? That's what I'm trying to say, right? There's this little bit of profit left over, but there's all this risk of a correction right now, right? This is one of those trades where I go, I don't think it's worth it. Now, don't get me wrong. Let's play this game. What if price goes higher? What if price goes lower, right? If price goes higher, then it completes our measured move. Then we look for buyer failure to sell it back down. Remember, the buyer failure at the high is the most aggressive trade. Then you follow it up with the sellers holding the pullback, and then the sellers take control. Remember, look for proof. The failure is the first opportunity. The pullback's the second opportunity. The strength is the third opportunity, which, of course, we'll teach you guys all that stuff in classroom sessions at School of Trade. Now, what if price goes lower? If price goes lower, I mean, isn't that what we're all waiting for here? We've already made the overshoot. We've already made the measure. Again, we may not have made the measured move, but if it goes lower, we assume, right, job is done, and we're looking for a two-legged correction. Back to where? I'm looking for an overshoot of the low, and I'm telling you right now, if I'm a bull right now on gold, I've had a ton of success, right? If you're a buyer on gold right now, you are fat and happy here right now. I am going to stay patient, and I'm looking for a trap low. The absolute ideal opportunity for the bulls tomorrow is going to be to see price hit that 1114 area, and then just as fast as it goes down, sellers get trapped, and we shoot back higher again. So the moral of the story is, if you're going to be a buyer on gold, be patient. Then wait for proof from a failure, right, to make the most amount of profit. If it shoots higher here, again, we understand why, but it really doesn't change much for me. If we shoot higher here, I'm not going to make a very good income as a day trader buying high, right? So I don't want to buy the high here. I want to see, again, a two-legged correction, then see the sellers fail, right, and then buy it off those highs, right? Buy it at a low. Don't forget, you're not alone on that tomorrow. If you need a plan, come out and see us. Now, the euro is in a very similar scenario as we wrap up tonight's newsletter. Euro, by far the most sloppiest of all the charts here tonight. And again, no surprise. The dollar's highly affected by the FOMC announcement today, and the euro is the biggest piece of the dollar index. No surprise. Now, with all the sloppiness you see on this chart, it's pretty well behaved, right? It looks a little bit crazy, right, up at these highs. Now, this is where we're going to talk about a little bit of psychology here again. Euro is clearly bullish, but it appears the buyer has already got their target because the last few attempts to push higher have been really weak, which tells us to wait for a two-legged correction lower before we consider buyer more. We have a major channel with a possible undershoot of the highs. Okay, that undershoot of the highs, right, and a completed measured move that's trying to push price higher, but it appears to be losing momentum. This tells us the bulls most likely already exited before this move, and now they're waiting for a bearish correction before they buy more. If price rises higher, it will complete the channel rotation, so we can't buy the highs, and if price goes lower, we have a few support areas for the buyers to wait for patiently tomorrow. Very similar to gold. Very similar to gold. We look at this euro chart right now. Every buyer has to be very, very happy, right? The last couple of days, we've absolutely nailed, right, the strategy for the euro. So hopefully you're one of those, right, one of those fat and happy cats right now on the euro. The bottom line, though, is we have a major measured move. These multi-day measured moves, all the big players, you can see this big, big reaction to it. Chances are they took their profit. Now, when I see a long-term measured move reached, I'm looking for, again, a two-legged correction, trap out some sellers, and then take it back higher, but that's not what happened. You can see, again, this is what I call that steamroller effect, right? The bullish market just keeps on getting bought up. That's why you don't sell in a bullish market. You wait for proof, right? Or you take it on a failure to try to get some juice into it because you're going to get that momentum continuing, right? These are those kind of just blind buyers going into that news, okay? So news takes it higher, but now look closely. Let's go into this area right here, right? Look closely here. Here's what I see. I see the measured move and the bulls take their profit. I then see the lack of closing higher, right? See it? Look, we definitely tried a little bit, right? We got above it, but look, it didn't close above it. It closed back below. That's your first sign of weakness. Then we see this, what appears to be a fist fight, right? You can definitely look at these candles, right? Big green bar, big red bar, big green bar, big red bar. Look at the size of the red bars compared to the green bars. It looks weak. Now, obviously, take a step back now, and you can see we have a possible undershoot of that channel high, which should result in an overshoot at that channel low. So, again, this is where, if you're a buyer right now, you're thinking, well, we've got a lot of smoke billowing out of this freight train right now. Better to stay safe than sorry and wait to buy low, right? Wait for a correction low before we buy it. The best opportunities now are going to be to dig into these lows, right? We got a lot of real tasty areas here. What you'd love to see is, if you're a buyer, is a two-legged correction, overshoot that low, right? Look for a kind of a stop run here below that 8,700, right? And then right back up, with the ideal being a pullback. I'll tell you, if we get back to 85.80, 86.45 area tomorrow, there are going to be a lot of buyers out there that see this as an absolute gift from the trading gods, and they're going to love the chance to take this thing higher again, right, if they get that chance tomorrow. If it does shoot higher, though, right, if it does shoot higher, we'll expect to see a completion of that channel rotation. I mean, after all, if we take just a broad stroke on this, you can see, like I said, it's ugly, but the channel is just remarkably balanced here, and so that will complete that channel rotation. If we do push higher in the overnight session, that's 1, 2, 3 pushes. Look, count them. 1, 2, 3 pushes up. It's pretty much the same thing. Buyer failure at the highs for your chance to sell off those highs, right? If you don't want to sell with the buyer failure, wait for them to hold that pullback. If they get that pullback, that's your clue the sellers have it, and they'll be targeting the low of that channel. And again, the buyer's really waiting for a little head fake down at these lows with the drooling over that gap fill down around 85.80. We're going to see. Tomorrow should be an exciting session with this euro, just because, again, tomorrow's the day where all the traders come in. They've got their plan put together. They're fully rested. They saw what happened today with the FOMC report, and they're ready to rock tomorrow. Now, stay patient. Follow the plan, right? Get proof. And we'll make some profit together tomorrow morning. Don't forget, Trade Room opens up tomorrow morning at 8 a.m. Eastern Standard Time. Join the free trial on our website. You'll learn more on my free trial than anywhere else on the interwebs. I can guarantee you that. I've got 3 levels of membership: beginner, intermediate, and advanced. That way, everybody has a home here at School of Trade. And don't forget, we have someone standing by 24/7, 365 to give you guys a hand. No question too big or too small. Now, rest up. I'll see you tomorrow morning at 8 a.m. If not, tomorrow afternoon at 8 p.m. Eastern Time, we'll do it all again for a Thursday edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here tomorrow. Adios, amigos. Bye-bye for now.